Welcome to Electrified. It's your host, Dylan Loomis. So first up today, I just want to highlight a few things from this Wall Street Journal article. First, every now and then I think it's important to remind ourselves that still, according to the latest data, only around 6% of new car sales are EVs. Sometimes us being in EV land, it feels like a lot higher than that, but still 94% of all new car purchases are internal combustion engine vehicles. So think about what Tesla's business will look like when this number is 15%. 30%, 50%. We're still just getting warmed up. Second, this article went on to talk about how many different CEOs have been surprised by the demand for their first electric vehicles, meaning most of these companies are still reactionary and scrambling to try to catch up with the demand because their initial expectations were, we'll just dip our feet in the water and see what happens. Well, things are taking off a lot faster than expected. Third, they gave an update on GM. The company has been making the Hummer and Lyriq at rates of less than a dozen a day. People familiar with the matter said they've been constrained by battery supplies, according to a GM spokesperson. We just heard that Tesla is basically no longer constrained by battery supplies. For the first time in years, Tesla has been able to get enough battery supply. Now, yes, this will change next year with 4680s, but for all other product lines, that was awesome news. And finally, this quote from a Ford exec really just sums up this whole article. Executives from traditional car companies were too cautious on their early plans for electric. Here's the quote. "We sat around and said, who really wants an electric truck? We don't know." This really should highlight the gap between Tesla on one hand going all in dating back to before 2010 and the rest of these automakers, most of whom are still now sitting around saying we don't really know who's going to want EVs and what type. And on that note, this whole headline, some of these traditional automakers saying that their gas-powered cars are going to generate profits to help launch their EV businesses, well, that may be true now, but the question is how long will that last? You have to remember, as economies of scale come down, yes, maybe certain models have higher demand because the internal combustion engine demand will have to concentrate around a fewer number of models. However, generally speaking, most gas cars over the next few years are going to be producing less in terms of volume, and when you have fixed factory costs, that just means lower and lower margins. And just so you know, I'm not making this up. This was a great tweet from James Stevenson talking about some people are now starting to worry about Tesla's demand. You shouldn't, but here is some data visualization to back that up. Pause the screen if you'd like, but it's very simple data. We just have data for Ford, GM, and Tesla from 2016 to 2021, and it's just global vehicle deliveries. You see the trend for Ford, you see the trend for GM, and you see the trend for Tesla. Once again, just getting started. So James, if you're watching, good stuff as always. Next up, I think this is super important. Yesterday, I had mentioned everyone is waiting for the Fed to pivot when it comes to interest rates. Personally, I think a pivot actually means reducing rates, not just lowering the rate at which interest rates are going up. This is crucial because I think now a lot of people are just expecting that whenever the Fed cuts interest rates for the first time, whether it's next year or 2024, that the market is just going to start to rip from there. However, I saw Ben Cowan talking about this the other day. So this blue line is going to be the interest rate or the federal funds rate, currently 3.25%, and the orange line is going to be the S&P 500. These three yellow lines are going to be the last time where the Fed started to drop the interest rate. So back in 2019, you see it right here. Look what happened after that. The S&P 500 actually did dip. Now you can't see it. It looks very small because this is on a logarithmic scale. But here's one you can see better. Going back to 2007, where the Fed started to lower interest rates right here. Look what happened to the S&P after they started lowering rates. It still dipped after that. It dipped to the tune of 56% over the course of almost 2 years. And one more, going back to 2001, where the Fed started to lower interest rates right here. Once again, the S&P 500 still continued to decline for some time after that. In that case, it went down another 35% over the course of around 2 years. And lastly, in all three cases, the S&P started to rip higher once the Fed was actually done lowering the rates. You see it right here. Here's where they finished lowering rates and the stock market took off. And the third time, once again, they stopped lowering rates right here. And that's basically where the S&P started its upward trend. So of course this guarantees nothing, but I think it's really interesting and something to keep in mind. Now, I have to say, I know that some situations are out of our control, but I am a firm believer in planting good seeds where we can, so eventually we can reap a good harvest. And yes, that's part of why I've linked up with Athletic Greens, the sponsor of today's video. I've been taking AG1 now dating back to last year after seeing Lex Friedman mention it. I spent 3 years in the health and wellness industry, and let me tell you, most people would be well served just by boosting their vitamin and mineral intake. Too many people are deficient in key minerals, and the modern diet stinks. AG1 has 75 vitamins, minerals, and probiotics that when taken consistently can support gut health, energy, immunity, recovery, and focus. The all-in pod actually just got done talking about the importance of gut health. Anyway, I just mix 1 scoop in 8 ounces of water and my superfood drink is then ready to enjoy. And as someone who was hospitalized from a nasty stomach virus last year that I'm still experiencing lingering effects from, I can promise you gut health is far more important to our overall well-being than most people realize. AG1 is also independently certified by NSF, so you know you're actually getting what's on the label. AG1 has offered to provide a year's supply of vitamin D3, K2, and 5 travel packs free of charge with every new purchase if you use my link in the description below. So if you'd like to support your overall well-being, take a look into Athletic Greens. Next up, a Reddit user shared this in the mobile app. Now in the service section, you may be able to check your CCS adapter retrofit status. Most people don't have dates yet, but they say coming soon in 2023. But this should give you a good idea if your car does indeed actually need a retrofit to be able to use the new CCS adapter. You should also be able to check your additional vehicle information in your car and check CCS adapter support, whether it's installed or not. Sticking with a Tesla service situation, we have this tweet from Joe Tetmeyer. He shared some screenshots basically asking Tesla service why he hasn't received the FSD Beta update. He checked all of the boxes and all year he still hasn't received it. Apparently time and time again, service just told him you have all of the hardware and everything that you need, you just have to be patient for the firmware update. But contrary to what Tesla service has told Joe, now Elon is chiming in saying your car needs a camera upgrade, which is free of charge. There are a few thousand cars in a similar situation. Replacement cameras will be available early next month. But to add more confusion to the situation, Joe then replied saying, I already had my cameras upgraded by Tesla for free as part of the necessary upgrade back in February of this year. So the point of this was not to just confuse everybody, but to let you know that if you haven't yet received the FSD Beta, maybe look into this camera upgrade if it's the only thing you can think of why you haven't yet received it. Here we have local news Chris 6 reporting that Tesla's new Lithium refinery that's proposed for the Gulf Coast of Texas is now going to have a scheduled hearing for the public next week. At 2 p.m. on Monday, Nueces County Commissioners will hold a special meeting where the public can learn more about the project and voice their opinion on the plan. Next up, it's always very important to remember this fact.
Any lessons from Tesla that you adopted to SpaceX?
Well, the automotive industry is very good at manufacturing, and the rocket industry is good at advanced materials and making things light. So that's where the cross-pollination is most useful, is taking manufacturing techniques from automotive, applying them to rockets, taking advanced materials and design from rockets and applying them to cars.
Here we have a Tesla recall, but I won't bury the lead. This is yet another minor software update. The problem? The window automatic reversal system may not react correctly after detecting an obstruction, this affecting just over 1 million vehicles. A closing window may exert excessive force by pinching a driver or passenger before retracting, increasing the risk of injury. The remedy? Tesla will perform an OTA software update of the automatic window reversal system free of charge. On this very topic, Elon chimed in saying that the terminology is outdated and inaccurate. This is a tiny over-the-air software update. To the best of our knowledge, there have been no injuries. Moving on, shortly after we heard Ford was going to take a $1 billion hit this quarter due to inflationary pressures, now we get some more color on that situation. It's pretty simple. Automotive industry suppliers are now raising their prices to their customers across the board, their customers being automotive companies. Suppliers contacted by Reuters said they have raised prices on parts in the range of 7 to 20%. An executive at an aluminum parts maker had said in Europe alone, natural gas and electricity prices are almost 10 times what they were 2 years ago thanks to the Russia-Ukraine situation, and even in the United States, those prices are 5 times higher. Throw in the tight labor market and there's the higher compensation required to attract workers. There's no improvement improvement in sight. This story really is one that we've heard now for a long time. The suppliers say things won't likely change anytime soon. It's the new economic reality and will continue to fight for financial relief, basically fighting going to the automakers asking for more money. On that note, today Ford put out a new press release basically saying they're reorganizing some executive positions to better focus on the global supply chain, to restructure some things, and to more better focus on new electric vehicles and software-based cars. Now, I won't read through which executive is doing what. I don't think a majority of you are really that interested. However, go ahead and pause the screen if you'd like to see who's going to be doing what exactly. The main takeaway really is this: developing and scaling the next generation of electric and software-defined vehicles requires a different focus and mix of talent from the accomplished Ford team and many new exciting colleagues joining our company. As I highlighted above, Ford has brought in some new talent previously from HP, Google, Motional, Intel, and Apple. Second biggest takeaway, Ford is transforming its global supply chain management capability to support efficient and reliable sourcing of components, internal development of key technologies and capabilities, and world-class cost and quality execution. And lastly, it should not go overlooked that Doug Field, yes, previously from Tesla, is taking on an expanded role as the Chief of Advanced Product Development and the Technology Officer as Ford Model E, its electric division sales, and digitally enabled vehicles. And here's the resume of Doug Field. As far as I can tell, he's an absolute stud and a major get for Ford and its future. Next up, GM is closing reservations for the Hummer, both the pickup and the SUV, as they're starting to realize producing less than 100 a day is going to take them years to fulfill this backlog that apparently sits around 90,000. GM will officially close reservations for both vehicles this Thursday, so anybody that wants one, you better get your order in by Wednesday. The Hummer EV went into production earlier this year, and so far this year, at the end of June, the company has sold less than 400 of these vehicles. The SUV version of the Hummer is expected to arrive to dealers in early 2023. The global head of GMC said, "We knew it would be a slow ramp," referring to the Hummer pickup truck version, but next year, when you look at the calendar year, I think you'll see a normalized year. Honestly though, this is really just following the trend for some of these legacy's first EVs. Next up, from automotive news, Toyota has been forced to cut its global production plan by 100,000 vehicles in October and 50,000 in November, when they said just last month they wanted to make 900,000 a month from September to November, but now it sees output at 800,000 in October and averaging only 850,000 from October through December. And along similar lines, now today, Honda is also saying it will reduce car output by up to 40% at 2 Japanese plants early in October. Next up, GM has announced a new partnership and investment in a little-known recycling company, Lithium, to create a circular EV battery ecosystem. This new collaboration will focus on validation of Lithium's recovered battery materials for the use in production of new batteries and potential to acquire battery materials, and joint investment in research and development for both recycling processes and recyclability of future battery design. Here we have Engadget reporting that XPeng's G9 SUV is now the world's fastest charging EV. Apparently, it can charge up to 480 kilowatts, and remember, Tesla's V3 superchargers are only at 250 kilowatts. There are some Electrify America stations that are supposed to be up to 350, so this definitely would be a first. However, remember, it's all about the charging curve, not just the top speed, and you also have to ask, how is this going to impact the cycles or the number of charging and discharging cycles the battery can go through in its lifetime? And earlier this year, it was reported that Tesla could be increasing its V3 charging speeds to around 324 kilowatts, but we have yet to see that in the field. Here we have a new SpaceX filing, and in the first paragraph, you can see they're looking to benefit American students as quickly as possible, not only at home, but on their way to and from school. Further, SpaceX therefore strongly agrees with Chairwoman Rosen Worcel that providing Wi-Fi on school buses is critical to bridging the home homework gap. Connecting school buses will afford students the ability to optimize their commute time for necessary educational internet use, as well as time spent with family and friends or recreational activities. Moving on, personally, I'll be very impressed if Faraday Future still exists in another 5 years or so. However, this is worth talking about. They just got an EPA range of 381 miles for its FF91 vehicle, which at first seems pretty legit until you realize that it takes a 130 kilowatt hour pack to get that range. Knocking it down another peg, or 2 or 3, this vehicle is set to start at $300,000, which is, yes, more than twice the amount of a Model S or X Plaid. Last up for today, we get a new Tesla stock note from Morgan Stanley and Adam Jonas titled "The Birth of an American Green Shoring Powerhouse." The intro is awesome. He says, Tesla's EV prowess is well known. I would argue is really not that well known, but anyway, what is less known is the company's potential to drive battery manufacturing efficiencies at Terra scale that investors will value, with a supply chain that the Department of Energy may value even more. The more we look at the IRA, Inflation Reduction Act, the more concerned we feel for Tesla's competition. Adam talks about some of the comments Martin Viecha made last week, but he said why this is important. It suggests Tesla's ability to reduce cost is not limited to the battery cell or the pack. In our view, the reduction in cost of goods sold per unit can continue falling with continual learnings, higher volumes per SKU, more economies of scale, we talk about that a lot, greater efficiency in supply chain, and other factors. This is basically exactly why I said the other day that personally I think Tesla can sustain margins above 30% before you really even factor in anything significant from the software as a service side. As I said, especially once the economies of scale at Berlin and Austin are ramped. And on the IRA, they said it further unleashes the latent power of US regulatory support and the arsenal of democracy in fostering onshore battery manufacturing at scale. If Tesla makes around 3 million EVs just in the United States by 2030, assuming a $10,000 IRA boost per vehicle could be worth over $30 billion to Tesla. And to clarify, given no change in the IRA as it's currently written, Tesla stands to potentially benefit in the amount of $55 billion of tax credits from 2023 to 2030 from production tax credits alone. Saying right here, we note that this does not include stimulus on the demand side at $7,500 per car, the consumer tax credit which doesn't directly go to Tesla. Morgan Stanley saying, in their opinion, the production tax credits, remember that's the $35 per kilowatt hour to make battery cells and the $10 per kilowatt hour to make the modules, are vastly more achievable than consumer credits, the $7,500, when considering the feasibility of completely eliminating all minerals from foreign entities of concern, which we believe will be extraordinarily difficult to achieve for any EV manufacturer, even Tesla. And lastly, we believe that investors don't yet appreciate the sheer magnitude of this bill. For the first time since its 2010 IPO, Tesla may soon find itself as a consensus long in the institutional investor community. That has never happened before. And check this out, they're saying through 2030, we forecast Tesla to generate an aggregate of $351 billion of free cash flow. By contrast, we forecast GM to generate approximately $35 billion, or 1/10 of Tesla's free cash flow. And lastly, Jonas says Elon Musk as US energy ambassador. He goes on to talk about Master Plan Part 3 and AI Day, but to conclude, he said, will Tesla's emergence as a US infrastructure player drive a narrative shift powerful enough to onboard longtime skeptics in the name? Yes, we think so. It's tough to end a video any better than that. Don't forget, check out AG1 linked below to get your freebies. Hope you all have a wonderful day. Please like the video if you did, and a huge thank you to all of my Patreon supporters.